Hi traders and welcome, Lockie here. Hope you are absolutely fantastic. Please excuse the casual nature of this video. I've just been outside actually having a snowball fight with my 3-year-old. Now ladies and gents, this video is going to be about how to trade gold in both directions, up and down, and it's a culmination of not only trading since, dare I say it, August 2007, but I want to give you some tips and tricks as to how to trade gold really well. I was particularly targeting the US Open as per a number of the videos that I've already got on the channel. Now the reason I'm going to do this is during the live trading in this week, I actually got a lot of compliments about that video, how to trade gold like a pro in 2025. So what I thought I'd do over the next couple of weeks is actually record a series of videos for you guys talking about the pros and cons of gold. Ultimately today we're going to be talking about very easy to achieve $200 profit targets. We're going to speak about the 80% rule. We're going to talk about extreme volume and how to use it to your favor. Guys, and finally we're going to talk about trading off the strong candles, which I do believe is going to be really good fun. Now guys and girls, as I said, I've been outside with a snowball fight. It's the 22nd of February. So what we're going to be doing, guys, if you have a look at this chart here, we're going to be analyzing the 21st of February, literally midnight or so trading last night, which is the US Open for us here in Japan. Now, for those of you that missed the first video, I just want to highlight this is a 5-minute chart over here on the right-hand side. That is probably the best and most accurate futures trading chart for almost every market around the world. Currencies, oil, gold, all of the stock indexes around the world, absolutely incredible to trade. Guys, this workspace that you're looking at here is the workspace I would suggest for anybody that's just starting off in the game of trading. So you've got your 5-minute chart here on the right hand side, which is your primary execution chart. You've then got your 15-minute chart, top left hand corner, then you've got your 30-minute chart and your 60-minute chart. That enables you guys with a little bit of training and experience to pick up some far larger trends, far larger moves in the market using signals like static bar reversals, swing triggers, step breaks, ABC confirmations and similar things, which we will cover guys in future videos. So suffice to say, this is literally US Open from Friday, I should say, Friday the 21st of February. I see the date down there on the bottom left-hand corner. This is clearly the US Open. The chart is not live, guys and girls. The chart is not live because the futures trading data is turned off, guys, over the weekend. Now, the big lesson, guys, the big lesson will come out of the US Open guys, from last night is really quite good fun. What I want to draw everybody's attention to, if I may, are these big orange and this mustard green little candle here. So the big orange candle here, ladies and gents, that is an extreme volume candle. Now we have an indicator built into our charts, which tells us, in this case here, extreme orange volume. The sellers are using way too much volume. So instead of actually dropping the market down, get ready for the market to turn and go back the other way. Now, likewise, as this mustard green candle just here is a candle saying the buyers have used way too much volume. The market is highly likely to turn and go back the other way. Now, how do you use this extreme volume to your advantage? Well, quite simply, as in the case of these sellers selling down here, we know they've run out of volume. So what we actually want to do is two things, right? We want to work out why they're running out of volume. We ultimately then want to find out a little bit of a buffer to send them back the other way. Now, a really exciting thing about futures trading, particularly as a gold futures trader, is this Fibonacci that repeats itself over and over again. So what I'm going to be doing here is I'm just going to draw my Fibonacci up, guys, in order to catch them on the way down. Can everybody see we've been caught at these little fibs down here? We call them the evil 90 twins, and we've got the evil 76s above us. But suffice to say, guys, when the market actually sold down last night, it actually failed here perfectly. And what we actually have going back the other way, ladies and gents, is what we call a 1-rated. You see that little 1 underneath the candle there? It's a 1-rated static bar reversal long. Now, what does that ultimately mean? For the junior traders, you had an opportunity. This is a $200 box. Guys, you had the opportunity to actually go long over the top of that candle. So please don't enter. Guys, please don't enter your trades on the body of the candle. You're actually far better off entering just outside the range of the candle. Why is this? You're basically forcing the buyers to push into new territory. You're forcing the buyers to prove they're actually really strong before they even pick up your order. Now, guys, if you approach gold in this manner, you typically run at about a 92-93% strike rate immediately entering on the body. Guys, if you enter outside the range of the candle, you can be sitting at about a 95% success rate. Now, why is that important? Guys, that's important because the only way to build a positive psychology around trading is literally take back-to-back winning trades, guys, over and over again. Now, that brings up a really cool little point, guys and girls, if I can. The 80% rule, what does that ultimately mean? This is a $200 box or a $200 target. The 80% rule basically says once the market has moved 80% of the way to your profit target, guys, please control the risk on your trade. That means reduce your risk to zero or put your stop loss automatically to positive, so you can't lose any money on the trade. So what we ultimately got is we got climactic volume. So this orange candle here still tells us that the sellers are running out of steam. So all we did is work out why they're running out of steam, turn it around and send it back the other way for a really simple $200 trade. And guys and girls, not to be rude, $200 might not be that sexy right now, but once you've been doing this for 5 or 6 months and that $200 box is potentially a $600, $800 or $1,000 box, because you simply just slowly step up contracts. Whereas once that becomes a $1,000 box, this gold trading becomes a lot more sexy. Now, what I'm going to do in the next video to make sure this video is not too long, guys and girls, I'm going to talk about that sell down that occurred after this big mustard green candle. I'm also going to talk about this classic static bar reversal down here, because as per all of the previous videos, guys, we've been looking to trade off the pivots, and you've got an incredible -2 rated static bar reversal down the bottom there. So I'll go and create, guys, another video for you on this mustard green candle and how you could have dealt with it. Then we'll do a third video down here on how to actually deal with that static bar reversal, and that should get everybody as often racing in the game of gold trading. So I'll see you in the next video.